everyone, welcome to another edition of our executive interview series. I'm your host, and today we are diving into one of New Zealand's most established agricultural investment specialists with a remarkable 35-year-old track record. Joining me is Andrew Waters, the CEO of MyFarm, a company that has opened the door to over $1 billion in primary sector investments in 1990. Andrew, thanks for joining me.
Thank you very much, Rhythm. Looking forward to our discussion.
Likewise. Now, Andrew, as far as I'm aware, MyFarm has been operating since 1990, which gives you tremendous perspective on New Zealand's primary sector. So for our audience watching this interview, can you walk us through how the company has evolved to become the specialist in this sector investment that it is today?
Yeah, originally the firm was founded by hands-on farmers, and myself and my main partner in the business, we're farmers as well. So we've had periods of our career when we've got dirt under our fingernails. They saw the opportunity to create investments for some of their colleagues and some of their colleagues, perhaps 1 or 2 degrees separated for farming, but liked the agribusiness, the food story, and land-based investing. So they bought farms that they saw had underlying value, and right back in those days, dairy was a very strong sector, and in fact for 20 years of the firm's existence, buying property, converting to dairy, and improving developments, selling on upturns. So that was the original period. For the last 8 years, we've been focused more broadly on the agri-investing space. So growth assets, including permanent crop horticulture, special apple varieties, cherries, kiwi fruit, some defensive assets, chicken sheds, Marlborough Sauvignon Blanc lease properties, and then we started to invest in that sustainability and energy transition story. So afforestation, native afforestation, specialist manuka plants, and then more latterly, institutional quality but smaller scale solar arrays, which work in with our renewable energy structure in New Zealand.
Amazing. That evolution is truly fascinating, especially when we look at where you are today. Now, Andrew, let's talk about your current offerings. So you currently have 2 key investment opportunities that have caught our attention. So the Sequest Forestry Fund and the MyFarm Kiwi Fruit Fund. So what makes these particular sectors especially attractive in today's investment landscape?
Yeah, I think, we consider the whole landscape of investing in agriculture here in New Zealand. We look to sectors to ensure they're profitable, that they're generating sufficient margins to drive the sort of profits we need to return to investors. We then look kind of 5, 10, 15 years out and try to understand, do these sectors have a sustainable competitive advantage? Really, for somebody to lock up their property and their investment into a real asset, we think we need a 4 to 8% margin on their return above the risk-free rate. So we're targeting 8 to 12 to 15% total returns. So and then we match that sector thematic with a partner that can help us operate the property, and then the property itself to ensure it's of sufficient quality. So when we come to 2 of our offers, we've got the Sequest Forestry Fund. New Zealand's unique. We grow grass very fast. We also grow trees very, very fast. So what we're doing is we're taking poorer quality country, which is in sheep and beef production. We're planting in forests. We're generating or sequestering carbon. New Zealand has a formal emissions trading scheme, which forestry is registered in, and we can earn quite attractive returns from carbon credits through years 5 to 17 of forest ownership. So that's delivering us, we think, a return of between 9 and 12%. We've actually just sold out of a portfolio of forests and achieved a return of 16%. So that's been a very successful track record that we're currently looking to replicate. Kiwi fruits, again, something uniquely New Zealand. We are the supplier of the world's kiwi fruit in many respects. We've got a very good variety in SunGold kiwi fruit. It's very productive. So from a farmer's point of view, we've got high levels of production. It stores through the supply chain well. So our monopsony marketer, Zespri, can supply fruit all year round. And customers love it. They pay a very high price point. So we're generating operating margins of 60 or 70% in terms of the revenue versus our costs, and then very attractive investor returns, targeting total of 10%, with the majority of that made up through cash flow. So two quite different things. One's in the forestry sector, looking to that whole carbon, sustainable future, needing to swap out petrochemicals into more bio materials as we go forward. And then the other producing high quality fruit into Europe, a little bit into America, not too much, 8 or 10%, China, Asia, and so forth. So quite different, but very Kiwi, very diversified from what else other people will be investing in.
Absolutely. Those are very valuable insights you shared with us, Andrew. Now, what's even more impressive are the actual returns that you've delivered with your previous forestry investments. So let's dive into that. So as I understand, the original Sequest investors are realizing a remarkable 50% return on their initial investment with an IRR exceeding 16%. Now, that is an exceptional performance by any standard. So can you tell us what specific factors actually contributed to these results, and how do you actually plan to replicate this with the new Sequest Forestry Fund?
Yeah, Pinus radiatus, if anybody's been to New Zealand and maybe around the central North Island, we grow a lot of pine trees. That's a tree that's come from California. It grows very fast here in New Zealand, 7 times faster than in California, where it comes from, and 20 times faster than in Canada. So we've got that great climate, and we've bred successive generations of pine trees to grow very quickly. But with that quick growth, it also sequesters carbon very quickly, and it'll also provide a lot of suitable raw materials for building, for construction, and into packaging and other, as kind of petrochemicals, plastics, etc., are disrupted. It's a great tree. It's relatively cheap to plant. It establishes well. And we're planting on land that is less productive, so we're careful not to be taking productive agricultural land out of supply. We're planting trees, which is actually the best and highest land use for that. So we buy the property, plant the trees, register the trees and the forests in our emissions trading scheme. And then as carbon starts to be sequestered by year 3 or 4, there's a very specific and scientific measurement process that we follow here in New Zealand. We can actually start selling those NZUs to emitters that require them. So we've proven that we can buy property, we can establish forests, we can do it on budget and to time, we can register in the ETS. And we have also proven that we can sell these assets to institutional buyers whose business is forestry investment. So we're looking to re-establish a portfolio of several thousand hectares of pine forest with Sequest. The land values are, moderate at the moment. We're targeting some smaller properties, building a number of smaller properties into something of institutional interest. By targeting smaller properties, we're not competing with too many others. And then as we go forward, there are increasing tools for us to manage risk and return. Forward contracts on carbon, prepaying, being prepaid for our carbon production, and selling forestry cutting rights, and potentially selling the forest completely as part of the life cycle as well. So look, it's an exciting space. The world is, I think, still committed to climate change and the need to reduce carbon. And we've really got some nice structural settings here in New Zealand to enable us to do that.
Absolutely, I understand that. Now, Andrew, let's shift our focus to one of your other major offerings. So, your Kiwi Fruit Fund that we have talked about, that is targeting 10% annual returns, that it includes a substantial investment in Zephyr shares. So, could you explain the strategic advantage of being one of Zephyr's top 5 shareholding entities and how that actually benefits your investors?
Kiwi Fruit Fund owns 17 kiwi fruit properties, SunGold, this very highly productive variety. It's protected by plant variety rights for some period through to 2039. But in addition to that, we see a twist by allocating some of our capital into Zespri. So Zespri is a grower-owned company. It's a monopsony. So it's like a single desk seller. It has the licenses for exports. So what it's been able to do over the years has been able to control supply through plant variety rights on SunGold. So they limit supply to be less than demand. They've been able to invest heavily in marketing, sales and marketing. So Zespri is a very strong brand. It's probably one of New Zealand's strongest brands up through Asia into Europe. And the main thing that does is the quality of fruit and the high quality branding gives us a really good price for our fruit. But alongside that, also, Zespri is very profitable, and they have a track record of providing a 15 to 25% dividend yield. If their stock was on the NZX or ASX, the price would go up and the dividend yield would come down. But because Zespri is only owned by growers, there is a limited pool of capital. So because we're providing kiwi fruit to Zespri, we can become an owner of Zespri shares. We can take advantage of these dividends. So currently we're one of the top 3 shareholders in Zespri, and our target is to double our shareholding. So we have about 15% of the fund's assets in these highly valuable Zespri shares. So combination of productive orchards, very profitable, plus high dividend yield from Zespri shares makes a very strong investment offering, we think.
Yeah, absolutely. And that's a very unique position to be in. Now, speaking of position, many sophisticated investors that we speak with are actively looking for diversification options outside the traditional market, especially given the recent volatility in the market. So, how do MyFarm's offerings specifically fit into an investor's portfolio diversification strategy?
Yeah. A lot of what New Zealand produces is quite unique to us, or there's this comparative advantage, or sometimes there's a defensive capability or defensive nature in the assets. So most of our investments are land based, and we're generating operating returns, which then go through as distributions to investors. The land values are much less volatile, obviously, than share prices or even bond prices. And the returns we're receiving are generally related to food or, this energy transition. So not generally correlated to stock market returns or bond returns. So we would expect our investments in general to have low correlation or perhaps even negative correlation. And particularly when you think of New Zealand's specific opportunities, it's highly unlikely that the returns from a kiwi fruit auction are going to be, related to, shares from owning an airport or a bank or anything like that. So we find that there are different stages of the cycle. We're certainly noticing the phone ringing with more investors looking to real assets, to assets in the rural space related to food, which of course, everybody requires. So yeah, it's an important part of an overall portfolio.
Absolutely. Now, Andrew, looking ahead towards the future, what emerging growth opportunities do you see in New Zealand's primary sector that forward-thinking investors should be watching out for?
Yeah, we always try. We're not investment advisors, we're a product manufacturer, and we usually spend some time listening to people's objectives. So investors considering defensive investments, wanting a lower risk profile and perhaps more regular cash flow. We really like chicken sheds as an investment. We're a landlord. We own these specialist, generally new facilities, and they're leased over the long term to, one of our largest chicken suppliers and marketers here in New Zealand. It's defensive because of biosecurity rules here in New Zealand. It pretty much precludes imports of chicken meat. We've got a lot of fauna here in New Zealand that we want to protect, so we've got some protection. So a long-term lease, CPI inflation adjusted, and with falling interest rates, the returns of those investments are in that 8 to 9% return, so quite attractive. For somebody looking for growth assets, the Kiwi Fruit Fund is a good opportunity. We're closer to the coalface in terms of production, and we're very confident Zespri is investing heavily in new variety development. So the next SunGold variety is there growing in trial plots ready for us to deploy on our orchards going forward. So that's a long-term return and growth play. If you're committed to investments in that sustainability or energy transition sector, we have some solar investments here in New Zealand. Every sector around the world is different. In New Zealand, the base of our electricity production is hydro. So something like solar works really well. If it's a sunny day, we shut down the water. If it's a cloudy day, we turn the water on. So good high 10% returns, very tax efficient, long-term cash generating opportunities. So those are just three of the things that we're looking at present.
Amazing. Well, thank you for sharing those insights, Andrew. You've given our viewers a compelling look at how MyFarm is transforming the primary sector investing in New Zealand. And to our viewers watching this interview, both the Sequest Forestry Fund and the MyFarm Kiwi Fruit Fund, they both represent rare opportunities to assess premium New Zealand agricultural assets with impressive targeted returns. So to learn more about these opportunities or to connect directly with the team at MyFarm, please check out the contact information displayed on your screen or in the description of this video. Once again, thank you for watching. And Andrew, it has truly been a pleasure speaking with you.
A pleasure too, Rhythm. I wish you well for the rest of your day.
Thank you.